Michael, it's great to have you. Do we consider Oracle a bellwether at this point?
Yeah, I mean, look, thanks for having me on again. I appreciate it. I think we've said that there are a lot of platforms within software that are well positioned to take advantage of vendor consolidation. So if there's one thing that starts happening in a downturn, and CFOs start to sharpen their pencils and look at, hey, we're working with 100 plus software vendors often. Is there an opportunity to sort of reconcile that list? And that's where some of the large cap bellwethers, I think, are more likely to see continued strength. That's why we highlighted the defensive picks that you named, and Oracle would certainly fit in that bucket, but we don't cover the name.
Right. I will get to Michael. I guess two questions. One is what thread connects Microsoft Now and Workday? And when you do listen to Oracle talk about shorter invoice durations, potentially pressuring cash flow down the road, are these names that are immune to that kind of dynamic?
Not immune, but I think better mitigated, right? So these are businesses that I think have a few things working well for them. Number one, significant degree of visibility. They have incumbency with existing customers. That goes a long way towards maintaining good customer relationships and capturing better spend. Each of them have some merchandising capabilities. Microsoft is along the strongest at this. They can lean into cybersecurity, lean into opportunities like collaboration and Teams telephony, and give more for less, effectively squeezing out some of the other vendors. So certainly not immune, but I would, if I were taking a defensive position and we've said, this is our bucket for defense, we don't think the choppy waters that we're seeing in the markets are likely to go away, at least throughout the summer period upcoming. We think those names are better positioned, and from a multiple perspective, are pricing in a pretty dire recessionary scenario already.
Pretty dire recessionary scenario. So depending on what we get tomorrow, language-wise, out of the Fed, I mean, this 75 basis point hike expectation, I mean, I guess that's now built in based on what we saw yesterday. But what do you think software has to lose or to gain, depending on what we hear from there?
Yeah, I mean, look, some of the macro stuff, I think we've needed just some degree of resolution around the uncertainty that's happening there. We've said the macro data points just keep worsening, even though the software fundamentals are holding up quite strongly. So I think we just need some resolution. I think investors, by and large, are now asking the Fed to take a heavier hand. If there's a sort of a larger move, at least that shows that there's stronger conviction around making sure that we can curb some of the inflationary pressures that are playing through in the market. Look, what's been amazing is we've called this the game of chicken. I think investors have been telling us that, hey, the fundamentals are deteriorating in software, but we're just not seeing it. By and large, Q1 earnings season was much better than feared. Hardly any companies took the opportunity to reset expectations for the coming year. They're telling you we have good visibility. This trend towards digitization is not going anywhere. So I think the first thing we need to see is just some resolution of some uncertainty. Ideally, inflationary pressures start to lighten. The Fed conveys with better certainty what's ahead, and investors can kind of then go into a look forward mode instead of a look 24 hours ahead, which unfortunately feels like where everyone's at in this very myopic sort of near-term focus right now.